Introducing the 3-part options course with Hans Albrecht. Get access for free by scanning this QR code or clicking on the link in the description.
Hey, greetings. Thank you very much for joining us. It is Macro to Micro Options Power Hour. I'm Samantha LaDuc, founder of LaDucTrading.com, and I am joined by Hans Albrecht, hashtag Options Mentor Hans, in our Slack member workspace. We are coming together to kind of talk the market, of course, market plumbing that we see that influences the option flow and the direction. Also sector rotation, where I really tend to focus, and then lots of individual stock trade setups and the dynamics around options. You'll get some education, you'll get some trade ideas, and you'll also get an opportunity to ask us questions. So this is kind of a Q&A, ask us anything format. So feel free, about halfway through, pop in, hit us up in Zoom Q&A, and I'll monitor that for any questions that you might have. Well, we're in hoodies today. It's midweek, we're not feeling very fancy. I love that. And heck, I don't even have earrings on. So I'm really interested in getting your thoughts about this volatility crush that we've had, Hans, that yes, you predicted we were going to have one. This was a really big kind of recurring theme in presidential elections. And we talked about it right before, not only the expectation that Trump would win, which we both had, totally separate, but also that VIX would come on down and that would help markets stay bid. Well, they got, in some cases, very parabolic. So from the crypto, Bitcoin, and Bitcoin proxy rage, which everybody saw coming, to the kind of the SaaS reacceleration plays that we also started talking about a little bit each week. In fact, I keep kind of dropping my favorite one every time we do this show. So the one that I had recommended that I knew I was going to be doing into earnings Friday was Square. So that has worked out really well. So we're going to talk about your trades, to kind of review my ideas as well, but we also both agree that it's time to kind of calm down as we get into this Nvidia earnings next week on 11/20, and we get through options expiration, which is the monthlies this Friday. So take it away. Give us a feel for what you've got going on in this market review, and then we'll get into some individual plays.
Yeah, so okay, great to be here. Thanks, Samantha. Yeah, I mean, it's been an interesting week. We kind of foretold of this big volatility crush. We weren't the only ones, but we definitely played it very well. And we had, I think it was 5 or 6 different plays, different ways to play it that we gave folks on here, on our show here today. And then, of course, in the member rooms, we gave them quite a few different options to play. Some little bit more exotic, like the option butterfly, which isn't that complicated. And then there were just some simple plays like VXX puts, or VIX puts rather, VXX put spread. And then the good old SVIX and SVXY plays, which are short volatility. So these are products that have come under pressure the last few months with all this volatility. And so volatility can chop up certain products, as we know. A popular product in the option selling world is SOXL, which is the levered semiconductor. And you can see that even as semiconductors have recovered, the SMH has recovered, the SOXL has really not recovered nearly as much. And so and that's because of this sort of leverage decay. When you get a lot of movement, you get these products getting chopped to pieces a little bit because they are essentially short volatility. So when there's more volatility, meaning up, down, up, down, up, down over and over again, they get hurt. Now, if on the leverage product, if things just go in one direction, then that leverage can help you. But this hasn't been the right kind of market for those. And for those VIX products, it hasn't been an amazing market either for the SVIX and the SVXY. But finally, it was time to get in. So I run a pure vol strategy as well. I call it pure vol, and I got out of some safety positions and got back into short volatility ahead of the election. And I think the prevailing thought was that we were going to get past that event. And that's the funny thing about volatility is it's sort of it's a big sale after the event. It almost doesn't matter what the outcome of the event is. Volatility would have still been crushed. Even if Harris had won, volatility would have probably come down. I know you were a little bit more bearish on that outcome, so we'll never know for sure. But sometimes just getting through an event is enough for that volatility complex to relax. And then we talked about it last week. The MOVE index started coming down. That was something that was concerning us, that underlying rates volatility, because it speaks to other things, right, that are going on, maybe debt issues and maybe inflation, a number of different cross currents that can lead us to this sort of high level of rate volatility. So let's show everybody here for a second.
And I had a theme that we needed all three to come back down. In other words, the treasury volatility, equity volatility, and oil volatility. Right. We definitely have the equity VIX crush. We had the OVX volatility crush. MOVE is still being a little persistent. So we do not have the trifecta.
You can see the TLT is under pressure. We had just a little bit of a pullback in rates, and now I had a butterfly in TLT. Actually, I've had it on for a few weeks now, and I took it off. I said, I'm not liking the looks of rates, and I don't want to bet against Druckenmiller. That's probably never the best thing in the world to do. So, but I'm going to take off the risk. I've done really well on the strategy, and sometimes that's the tricky part is not just putting on the trade, but knowing when to take it off before that gamma level gets too high, that negative gamma. So when you get close to expiry on your options, you have less benefit from that theta decay, from that sort of nice juicy sleep at night decay that you make, that money that you make, and the potential for movement to really undo a lot of your hard work and potentially go the other way. So you're always kind of balancing those. And I generally have a rule that sort of under 30 days, I start to think about closing, certainly under 25 days. And there's certainly a lot of data out there. If anybody's an option seller listening today, there are some studies out there that show kind of 21 days and under is where things kind of flip the other way. You probably want to take positions off. Now, that doesn't include weekly option sellers. There are people out there who love to sell 0 DTE. Forget about weekly. They're selling 0 DTE. So all the rules are out the window at that point. You're kind of flying by the seat of your pants. But if you are a sort of typical 30 to 40, 45 day option seller, you're kind of looking to close at a certain point before movement kind of starts to hurt you. We can see here that this was our happy picture. If I had a big happy stamp, I would put it on the right side. This was our unhappy picture on the left side. So we have the VIX high. This is before the election. VIX futures fairly flat here and very concerned in the front when that front future is higher than the next one. You can watch this at VIX Central. So this is a great way for you guys out there to look and kind of keep track of how concerned VIX futures markets are vis-a-vis the VIX, which is in green here. And then after the election, we have this beautiful shape here. This is what we like to see. This is what leads us to markets like we've had lately, which is, oh, we're down 30 points, we're back to even. S&P drops a little bit, it comes back to even. That is not unusual in this kind of market. So unless we get some sort of fuel, some sort of spark that gets us moving to the downside, we can probably expect more of that and sort of a movement around that 6,000 level. And now you're getting a lot of options being sold in the market, dealers getting saddled with all these option premiums, a lot of covered call sellers coming in because VIX 14, 15, now we're under 14, touched under 14 today. There were some good premiums out there. So people are going to sell premium, especially going into the seasonal period, and a lot of other positive things that are happening as well. So, but with these VIX products, basically you've gone to sort of regimen where the SVIX and the SVXY can make money over time. It's not a massive amount. It's playing this movement of futures into the cash, and that's why these products go up. But remember, they're not based on the VIX. They're based on the VIX futures and their relation to the VIX. That's and the front two futures. So that's something very important to remember.
So some don't care about the VIX. They are really kind of not so comfortable trading it for lots of reasons, but they can still use it as a very valuable tool, indicator tool, not only direction, but also intensity of that direction. So talk about SPX a little bit. I said the same thing. Even this week going into Friday, wouldn't be surprised if we actually roll over a little bit. And I gave those particular levels, not very far, but we still have to get through Nvidia earnings next week, which is still pricing in a lot of upper level calls, little call spreads, so that right tail that we've also talked about week after week after week is still there. But semis have not made a push yet. They have actually been languishing. And I want to show something as it relates to my theme anyway. So let me just kind of put this up, which is over here. Yeah. All right, so I have been very, very impressed with the extremely strong move. Hopefully you can see this over here. This is IGV, this is software. There are a lot of SaaS plays, and this has absolutely taken off hot fire flames. It used to be dominated by the Microsoft, the weighting in Microsoft. But since then, a lot of other plays have come up to really kind of take a strong lead. And IGV as a SaaS acceleration thesis, it has been working really well, and it's taken a lot of fuel or money rotation, since I focus on sector rotation, away from the semis. So a lot of folks are just going to say, oh, because we gapped up on the Trump win and it's just like hot fire flames, but it's also, they were already in play because every week we've been talking about this, not just every day with clients and setting trades up, but we talked about DOCU coming out of this big base. This is on a weekly, by the way. This is my daily view. And a little bit over here on the hourly, just so if you're looking at this side by side, you don't get confused, folks. But we set this up. We set up Team. We set up PayPal. We set up Palantir. This has been an incredible move. And Twilio. Look at Twilio. I mean, this has gone gorgeous. So every week I've been dropping one, and last week it was Square. So these are all kind of part of the IGV explosion as well. So this was earnings on Friday. I said, believe it or not, I'm not worried about this one. And hot fire flames, it goes higher. But my point of bringing these up is that that's a sector that I saw in rotation and not so much semis using SMH. It's been sitting here sideways. You can see the chop on a daily. It's a mess. So this is where I think we're going to now turn. I think the love that has been IGV is a parabola. We're all parabola traders now. We get a little softening in this space, and we have a chance for the catch-up trades in semis. Could be wrong, but I'm still betting on that. So Nvidia, of course, is the leader of the band, but my point is I still have this kind of 272 price target for semis. This is now where I want to rotate. So you and I have done this every single week where I have set up, for example, that Nvidia financed call spread way back here when this came up. And this was September 11th. The market exploded higher because of Nvidia on September 11th. It was very clear that this was in play. So once we got above that 120 call wall, which we talked about, it was in play. So that financed call spread, which was December, and I mentioned taking half off before the election just in case, but the point was this was selling the 115 puts and buying the 135 by 148 call spread, and it has hit. We've obviously hit the 148, 150 area. This could be very volatile into earnings, but I think it'll still do okay. Semis will still do okay. So right now I want to transition into a SMH play. And that's one thing I wanted to ask you about. I know it's on the fly, you weren't expecting it, but take a look at your metrics. What do you think of SMH into Nvidia earnings, but giving enough time in case there is a shake and bake?
It's all about Nvidia. I mean, we've talked about how important it is, how it's bigger than all these G7 nation stock markets, how it's owned around the world, how it's a part of the big passive investing machine. It's just there's a lot at stake there, and that whole space. It's interesting. Your view on I appreciate your view on SMH because the semiconductors, it almost feels like the last man standing. We've seen, Micron's looking not great. I got out of a position today, some short puts for gain. They expire this week, so I wasn't worried about them. AMD, though, I was short some DC puts, and I got out of those for, I think, a small loss, actually, because I just started to look a little so-so. And then I'm looking at some other ones that actually had nice pops, like Qualcomm. People jumped on the mobile AI, bandwagon, but it sure didn't last long. So Qualcomm's turned back down as well. And of course, we've got the complete dumpster fires that we know about in SMCI and ASML practically. And so it almost feels like, I talked about it a month ago. I sort of said, well, if, it almost feels like it's a bifurcated market where the money is going to come out of the ones that just aren't in favor, and Nvidia is going to hoover in even more money. And maybe we're seeing that, but it's starting to make me just a little bit nervous. So I'd like to see that rotation that you're talking about. Maybe we certainly saw a little bit of money come out of the crazy coin complex and maybe push into the mag again today, and also your software names. So let's see how the rotation happens. Again, remember, the market is a male, right? In my view, because it can only think of one thing at a time. And so
oh my God, it's so funny.
I think
Okay, I should
it's
have been
true. So
showing
we'll
these.
see. I hope so. I hope it happens.
Well, I'm not SMCI. I have been a hater for some time. So this is getting exactly what it deserves, and I still think it will see 12, but it is on a 400-week EMA. So typically it has a bounce here, but honestly, below the 400 is just death. But your other ones, ASML, obviously, it also gave a really good reason down the, for its on the manufacturing side, they're all the same. CLAC, LRCX. Qualcomm did surprise. I have a trigger here. It needs to get above, but it never did. But all of these, even that you're talking about right now, even Micron, it is still in what I would call chop mode. So it's a little bit of a dispersion trade, for lack of a better word, for those who have been very excited. The other players that I just mentioned that are more so in the software space. So this is where the money has gone, and it has basically not gone here. I wouldn't call that the sellers have really stepped in. I mean, aside from SMCI and ASML, in the case of AMD, they just announced, right, that they're going to lay off 4%. It's in trouble. But big picture, I still think we can have one more run until we're done. That's my bet, right? So I'm looking for that. But SMH as a potential play into 272, and then I think it's done. I really do.
So let's see here. Well, if I look at Nvidia, Samantha, I see there's always a call wall somewhere, so, on most of these things, and there's a quite a large one at the 150 level. And so we've seen that these walls can have a big effect. Like
You mean 250 or 150 for Nvidia, correct?
What? Sorry, yeah, for Nvidia. Sorry,
Okay.
Nvidia at 150, and we've seen these call walls kind of play out. McDonald's been at 300, Meta at 600. So sometimes, I mean, we're kind of, we're a little bit of guessing, but it seems like that supply of stock around there has kind of kept them from going through. We saw that call wall at 120. As soon as it disappeared, Nvidia went for a big run. Now we're at 150. Is it going to happen again? Well, if the numbers are fantastic, the call wall is not going to matter. There's going to be enough organic interest in this thing that it's not going to really, nothing's going to kind of sit in the way of that. But beyond that, out of the 150s, there really isn't much gamma in the way. So this thing could really, really pop. I mean, it could really go for a big run if the numbers are great. And in my view, I just thought I'm going to sit it out and observe over the next week, see how it sort of shapes up into that number, and then maybe look for a play then. But off the bat, you could play SMH or you could just play Nvidia. And we saw that there was that chart.
Nvidia is off the charts, but
what was that chart I sent you today? I think I sent you one with oh, here, let me show you guys this thing. I think I showed you one with the Korean semiconductors that have just been slaughtered compared to the SOX. So there's definitely something's going on. Obviously, there's geopolitical.
It's not a fundamental story that we're in right now with this, euphoric honeymoon reaction with the Trump win. They're pulling forward tax cuts. They're pulling forward pro-growth policies, future devaluation of the dollar, and. So there is a whole bunch of just, buy the rumor, sell the news once we get the policies. So I think that right now fundamentals really don't matter. You can see what happened in crypto land, right? We had coin earnings were awful. I have to show these charts after you do that. But this is a case of Mara earnings were blah, but Riot earnings were terrible here. Let me just show you real quick. Let me just put this up real quick.
Mara had a big pullback today. Notice
but
that.
I said 2150, so I'm okay with that. I'm still strangely not worried. So for example, right, this has nothing to do with the fundamentals. Over here, it's better. It's better if you just kind of go over here. This was that 212 that we need to get and stay above, and then earnings came out and they were awful. Riot came out. Oh my God, they were terrible. Didn't matter. Bitcoin went up, and so crypto, Bitcoin, related proxies went up, period, full stop. That's all that matters. So now that we're having a little bit of digestion, now the crowds are watching. Will it get supported, right? I mean, you saw what happened with these plays. You were long. You were, oh my goodness, you got in at 181, you lucky guy. So the point is, this is still the chart to beat. Meaning, so this is still the one that all eyes are on, this Bitcoin advance, which is a liquidity tell, and the whole kind of macro world of holding up treasuries. But for the most part, this is still in play. It will digest. It's very likely going to come back down to, it could come all the way back down to 76. It's still in play. We still have the potential of a growth rotation in semis in Bitcoin, it's very exciting. But ultimately, at some point, we are going to have to talk about the market having its melt up potential, not just a Bitcoin advance, not just, Nvidia has been obviously very strong and likely beats, but the market that is still now, it might as well be 7,000. They're calling for 7,500 in some circles because of the expectation of lower regulations, lower taxes, et cetera, et cetera. So for right now, pace ourselves, correct. This week, one at a time. We don't have the euphoria now that the week is over. We know what the cabinet looks like also for Trump, and it's very, very frustrating. Very, very hawk. Very, very hawk. So we have a situation where we have to now start to price in other things. Let's just say other things. But we're not back from the honeymoon just yet. These parabolas are slowly going to revert. We'll get into some actual trades that will be trends. But for right now, you wanted to show your crush scene.
Yes,
your
so
right
let's take a
tail.
look at Coinbase. So Coinbase, I wanted to talk about this because this is kind of interesting. We had this was really not forecasted. We really didn't see anything like this in the skew going into Coinbase. And I like to look at skew. I like to get into the weeds a little bit when it comes to options. And so we can see here, this is sort of showing where calls are more expensive, and then above the zero line, puts are more expensive. So typically in this space, which is not unusual in gold, crypto, the calls are more expensive. And so this is kind of going into the event, and then suddenly these things sort of move to the upside on the Trump win and Elon being involved in all that, et cetera, et cetera. And then the skew really kicked up. So the calls got very, very expensive. And so what I've been telling people, they've been sort of confused. They say, well, when people are reaching for calls, isn't that very, very bullish? And I said, it depends. So the whole game of skew is really kind of a bit of art and science. So ahead of a move, if you start to see upside call skew really kicking up, that can be a sign that something's brewing. There could be something's maybe setting up for a squeeze. You need something to start the squeeze, but it sets up for potential accelerant, a kind of an accelerant or fuel to the fire. When the move starts to happen, then those positions can kind of continue to kind of create momentum to the upside if there's a true gamma squeeze. But we didn't see that until this massive, massive move. So I said yesterday, well, this is kind of, to me, it looks more like an exhaustion move where people were short, people were covering, people were looking for any way to get involved and protect positions, maybe short positions. And so they really reach for that skew. And I said, this is probably a little bit more, we talked about this in the members meeting. This is more of an exhaustion move. I wouldn't take this as necessarily a sign of more bullishness, which who the heck knows? Coin could go to 800 for all I know. But according to the skew, it looked exhaustion. So a member asked me, what do you think? And I said, how about this 330, 300, 270 put fly? And in basically one day, he made, I don't know, $8,200 or something like that. So these are the kinds of things we do for members at LaDuc. We kind of, help to guide them along a little bit. So I thought that was interesting, a little lesson in skew and a nice trade in there as well. And with the flies, you use the flies when vol gets a little bit higher. You want to use those flies because the options get a little too expensive, and most certainly options were very, very expensive after the move that these things had. Very kind of panicking move. And I mentioned yesterday, I said, somebody also asked me, they said at one point yesterday, the VIX was down, but the stock market was down as well, the S&P. And they said, well, that's bizarre. Why is that happening? And I said, well, it got so panicky that upside movement is still movement. And so don't be surprised when you get a very, very big move to the upside, even if it isn't in an area like coin or gold, which typically has big upside skew, you're going to get volatility kind of hang in there because upside moves are still moves. That is still volatility. And sure enough, all the vol market needed was a little bit of a pullback in markets to go, and breathe a sigh of relief and go, okay, this isn't going to get worse. We're not going to 6,300 in 3 days. So that's when volatility actually does the opposite of what you think it might. And it will actually come down with the market because it's a sense that normalization is coming back into the market, which up, all those huge gaps that we had that's not super normal, and vol will reflect that. A first down day, markets go, okay, this is a place to relax. And then sure enough, today we saw markets down a little bit to unchanged, but the VIX continued to get clobbered. And so we've been talking about adding, I talked about it early in the week, and I said, I don't think this is done. I think we're potentially going to keep going on the vol side of things. And here we go. So here's your VIX. Typically going into an election, you get what is the blue. So this is the average of all your moves pre-election, post-election. This red line is election. So you always get a vol compression, almost always, not every time, but on balance, you get a vol compression, but it usually takes 10 days or so before it hits bottom, rock bottom. And this time was a little bit different. We had a lot more fear. We had a lot more nervousness in all those various asset classes. And we started from a much higher point in the fear sort of gauge world, but it collapsed massively, and you've seen such a massive collapse that it didn't really have that 10 days to sort of play out. It happened immediately, and then so it's kind of sat around 15, and now we're starting to see it kind of start to drip. I call it the drip. And I think in the absence of, and now Nvidia can throw a little bit of a question mark in there. There's no question. I think it's bigger maybe than people are realizing, because maybe they remember the election, FOMC, this massive move, crypto, Trump, Elon, all this drama and excitement. They'll start to remember that Nvidia is very, very important for this, for this big theme, this AI theme that really took us for single-handedly took markets up for about a year and a half, didn't they? Before we started to see a little bit of broadening out. So maybe the good news is maybe it isn't as important as it was when it was an extremely concentrated move up in MAG and AI. We've broadened out a little bit. So on the one hand, I think it's still pretty darn important. On the other hand, the market has broadened out, and I don't think it's all about Nvidia anymore. And so we'll see how that plays out with the VIX over the next week.
So what are you looking at for sector rotation, if anything? Any sectors that you're actually playing? I think semis have a chance. XLE has a chance. I know you've been focused on IWM. I prefer to look at the small cap 600. It's more institutionally traded, but it's also the best of the 2000. So they put the better ones in there and it has a higher performance rating. I just like that one better. But are there any that you're looking at right now, or are you still doing anything with retail or IWM, XLE, some of the laggards? Because all the other key sectors have made all-time highs, right? So we've already seen the run up, honestly, and parabolic moves in many sectors like the IGV, the XLF. But are there any sectors in particular that you're looking at, you're spotting right now for long or short?
I think XLE is starting to look interesting. You're sort of, if you bring up that chart, it's starting to kind of knock on that 95 door. I know you liked kind of the 93-ish, 93 and a half-ish. Level. Yeah. It can be a heartbreaker though. It is. I find that to be very frustrating to trade. So you want to give yourself time because it can break your heart for a couple of weeks just when you think it's going to go. But I think it does represent interesting value. Quality stocks, huge cash flow, all those things that I like to see, big wide moats, all these wonderful things. So I think that's an interesting place, and it finally is acting a little bit better. Now the skew is pretty darn flat here. I'm not seeing anything too interesting, except that it's low. The implied volatility is quite low. So I think what you could do is you could position yourself in something like one on XLE is trading around 94.5, 95, I think. You could position yourself in maybe some March or April 100 calls. They're probably not going to be super, super expensive at this point. And I continue to believe that this idea that upside isn't too expensive, it's come back a little bit. So what we saw is, and we talked about this, boy, we made a great call on this. These were some big reversions, and you can see right here, upside skew just went bananas to the upside after Trump. It was trading very, very cheap. We're talking about that. When everybody's looking at the left tail, which is the downside, it's time to start looking at the right tail. And that's what happened. And it actually moved up into that big, strong move. So it was a very kind of interesting I wouldn't say totally abnormal, because I actually talked about it a month ago. I said this is so cheap to the upside. We could actually see a move up and skew on a jump, and that's what happened. So there were lots of ways to play this, and we picked a few of them in a few different names. So at this point, though, I think the vol's gotten kind of high, and I think you're going to see a lot of supply of vol. So I'm kind of thinking continue to play some of those interesting ideas. Maybe you could, coin pulled back to 281 if you've got the stomach for something like that.
And by the
Upside
way,
flies.
both Coin and MSTR had a lot of calls that came in that were sold. I wanted to pipe in when you were talking about how call had gotten up, the IV had exploded, right? Became basically a gamma squeeze in the 200 for IV for many, many, many stocks. And they started selling those calls. And of course, this is also kind of helping the softness in the space. But a lot of people don't trade that counter trend, right? So it's all about timing, and someone has to kind of know their own time frame. That's why I define it differently than other people. Chase, swing, trend. I'm looking at something that's going to be a few days. I'm not a scalper. A few weeks is a swing, a few months is a trend. So it also helps, I think, to put that in perspective as far as when we are talking about these trades, either the month that you're using the strike that manifests that definition of time frame, or just say, I think this is going to take into the end of year kind of thing. So it's just good to kind of put the time frame in. And I know you're talking about McDonald's real quick. That's a big time frame question, right? Because it's got big gaps above and below. When you were talking about the market big picture, take a look. This is still something that has me fascinated, which was we have a typical run up into inauguration and then 100 days of pulling back. So everyone is kind of racing on this euphoria, this honeymoon of buying stocks and or the Nvidia sentiment. But ultimately, once we kind of get to the inauguration, it's pretty typical, even if it wasn't Trump, that the market would have some softness after that. Just wanted to quickly show
Interesting,
that.
eh? So is that quite different, Samantha, from your typical January to, because seasonally that can be strong from November to kind of March-ish. So this is your
right now
outlier,
we're in
right?
the sweet spot. Right now we are in the sweet spot seasonally from November until the first week of January. That is the Santa effect, the 5 days and such. So after the 5 days is the inauguration, is the typical weakness. So it just happens to be even stronger in an election year post-inauguration, typically for 100 days. Again, statistics, you can always, throw them out, but that is something that I thought was very interesting when you were talking about seasonality.
Some people might think, well, we've pulled some performance forward. I don't know if that's true. I mean, I think Trump could be, fairly strong. He kind of has carte blanche to do a lot of things, which is a little worrisome as well. He can kind of, they're going to be able to do, they're going to be able to do kind of whatever they want. So I don't know if the market is going to price that kind of uncertainty into it, into the fact that it can kind of really, at first they're sort of like, wow, great. He's going to do all these great things for markets and crypto and everybody. We'll see how that plays out a bit.
Now the reality is starting to seep in that he has a massive number of hawks around him, and they are war hawks. So at some point, and I teased this yesterday, but it's really not a tease. It's a real consideration. At some point, we have to start pricing in. The question I had was, when will the market start pricing in war with Iran? Because prior to Trump, not only 30 days prior did I say, this is my election bet, Trump wins, but also I think the one of the trades is not just Bitcoin, not just Tesla, because of those are obvious, and the obvious are very profitable. But I said, what's not obvious is the peace trade. Whether we like it or not, very likely that there will be a forced armistice between Russia and Ukraine, and he will barter that, and the result will be the euro will fall and the dollar will rise. So right now everyone's saying, oh, the dollar loves Trump, right? And his proposed Secretary of Treasury is also writing about it. Oh, the dollar loves Trump. Yeah, well, look at the euro. So the conclusion of a war, which is basically getting priced into the euro, is a currency fall. I don't want to say collapse. So the euro is getting hit, and since it is about 60% of the basket, dollar is also rising. So you have a double whammy there. And yields have been rising. And I want to kind of segue real quick before we get to your McDonald's trade, because a question came up about TLT. And I'm going to share also my chart on this because I have written about this repeatedly. We're not there yet. So example, this was something I had written in regards to this. Santa came early. This was clearly back on the 7th. I have a client post that I put in here, revisiting the Trump trade, which is peace, which is very much focused on euro falling and dollar rising. but specifically about the TLT and when to come in and buy bonds for a trade that yields stop rising and bonds stop falling is basically it in a nutshell. I said, okay, first of all, we have got to get down here. The 10-year T-note futures is still falling, and I still have this level that we have not brought in. So this is a much better place. Actually, let me see where we are right now, like literally today. So this is what I have been waiting for to tag in order to be more comfortable about recommending. There we are. About recommending. So see the yellow? See the yellow? All right, so this is where we are right now. So on the 7th, I said, I don't think bonds are done falling. I don't think yields are done chopping about and rising. Once we get down here, then I think that's going to be a much better place for the 10-year to, and then move higher. I'm talking about the T-note futures, which is also tied to, obviously the retail proxy of TLT. And that's very much focused on yields softening. And my level is, it will come back down to 4.09. That is the level that I was looking for initially when I wrote pre-market for clients September 18th, time for a yield spike. We were at 3.62 base, 3.62. And I said, I expect this to move up into 4.09, 4.1, and then it'll finish up somewhere between, the QRA, which is Yellen's quarterly refunding announcement, and FOMC, and also we got, November 5th in here was the election. So we have had shake and bake of late with the 10-year. We've had shake and bake, obviously, with the red wave. It's intonating a lot. Tax cuts are spending, but less fiscal spending potentially, right? Girl can hope. Neither jobless claims nor Powell indicated economic growth slowdown, which this was written on FOMC day, which was Thursday. And then, of course, the Trump trade would be bullish, except big picture, guess what? I'm not so excited about that anymore because he is surrounding himself with war hawks, bar none. What a surprise. So all the libertarians, independents, Democrats, and centrist Republicans who voted for him are going,
they're going, what? We didn't think that would happen.
Supposed to stop the war, not escalate it.
Yeah,
and so,
Pete,
Pete these are
Hegseth
massive China hawks. These are massive pro-Israel and anti-Iran. This is not about Russia and Ukraine anymore. So bonds are going to have a tough time getting a solid, durable bid for a trade. But that's my level. I'm still 1, 2, 3, 4, 5. I'm still looking for that gap to fill.
Great point, Samantha. That's great. That's a great point. I love how you always kind of think of what's behind door number 3, because that's what's kind of happening, right? This whole sort of, and you're watching what's going on in that cabinet, and that's a very good point. And so I kind of thought the other day, well, we're getting back down into maybe that 430, 425, where we start to kind of relax a little bit. Stocks kind of enjoy that, and that's unraveling a little bit, which is maybe pushing a little bit of money into MAG as a place of safety. I put some clients into some short Apple and Meta because I kind of feel like those are a little bit places to hide a little bit. There's kind of big bank account type companies that are doing things right. So I've been kind
Amazon
of
that has finally made it through the Jeff Bezos 200.
Amazon. No, I called it and I got out around 209. So now I'm a little frustrated, but you can't grab every dollar. So I love it. I've loved it since, we've had the structures on and done well in that. And I think it does continue to go higher. So I'm thinking maybe doing a financed play, selling. I have to take a look at the skew, maybe selling some 195s, playing more of that upside that, especially into Black Friday and the whole, but I think typically it comes off a little bit after that event.
It does. I was just going to say it will retest 200.
Right.
So,
okay.
I mean, but absolutely the combo deal of Trump plus animal spirits in general, right? And just the call wall of 200, which was where he sold, 1.2 billion. And we had to absorb that supply. Long story short, now we're above it. You do not short all-time highs. I understand that you're talking about putting on structured long product with options, but we are extended. The mean is 195 and it's printing, it hit 215 today. So it is $20 extended. I would much rather buy it at its mean than $20. Yes, Friday comes in, it looks still very bullish. So
I like
Anyway,
that idea though. It's Amazon is that stock, having watched it for so long, it always gives back 10 or 15 bucks after it sort of makes a significant high. So it just is that stock. Remember, it didn't move forever between 180 and 190, and it finally went because it kept failing by 10 or 15 bucks. So, and I'm looking at a few things here just because the market's so extended. I'm looking at, I find that sometimes people want to focus on shorting strength, which to your point just now, why do you want to short things that are acting fantastic? You want to be very measured in the way that you short things. So I'd be looking at more things like McDonald's, like Nike, like I don't know if Starbucks has, I mean, it has moved towards 100 again. And I wouldn't be shorting Disney anymore. It's starting to look a little interesting. Something like a McDonald's where there's this overhang of news, and it's just too darn expensive to go there anymore. So you look at something like McDonald's, you've got this put wall down around 280. So what I would, the way I would kind of go through this, I'd say, look, you've got this put wall. I think the 300 call wall has really been holding very well. I talked about that weeks ago, and it's really been hanging in there and repelling the stock. It even got it over 302 the other day again, and it failed. So I'd be kind of looking maybe for continuation, follow through down towards this 200-day moving average. I like this level here, a couple of spots here where it broke out, a couple little touches here that lead me to believe that this could be a level. Now, the volatility is fairly inexpensive right now. So what I would be,
I like that.
yeah, it's inexpensive. So I would almost be willing to just buy. It's quite, the skew's flat, so you're not paying up a super high amount in terms of expensive puts. Meaning, when we talk about skews, that means are out of the money puts expensive. Well, they're not that expensive, and so they're not really pricing in that downside. So to me, that's interesting. That means maybe we have that move. As soon as put skew gets really, really steep, that's a sign that maybe too many people are going, okay, I'm bearish, or it depends what the product is, and that might be your sign that it's exhausted.
Yeah, I really like this one short. I like this one short for three reasons.
Good.
Yeah, I am first of all amazed that after it's only a 5% pullback on the E. coli that caused deaths, small amount of for a very large company relative. It was a knee-jerk reaction. I get that, but it left behind a gap down at 279.50. You kind of show it with a red arrow, which is also the 200-day. That to me is so in other words, there's a reason for it. Number one, for that gap down. Two, and Chipotle for a long, long time, it was kind of untouchable, right? So it wasn't that buyers just didn't want to step in. They may not have stepped out, but a little bit of gravity took hold, right? So this is what I'm looking for. Second is that gap fill. It's not a question of if it will fill. It will fill. So that's the second thing from just a technical standpoint. I have seen this way, way, way too many times. You do need to add a little bit of time. Also, this is going to be in the target hit, I don't want to call it the hit squad here, for the Bobby Kennedy's kind of assault on fast food and ag, industrialization of ag and big pharma. And there is no way I have any interest in trading XLP, XLV, and a lot of the components therein long. That's my shopping for shorts. And it's absolutely going to be under pressure, especially into the new year, if he is given any authority whatsoever. So I would say McDonald's is a great short. I would agree with that. Even though by the way, even though it is a fabulous company. I mean, this is this had been a trend long. So it's not that I'm beating up on McDonald's. I'm just saying for a swing short, I think it's a really good structure. But keep in mind that this is a REIT. This is not just a consumer food company, and then we measure strength of the consumer or food tastes or anything like that. This is a massive global real estate investment trust. So this is extremely hard to roll over. I'm just talking about a short into 279.50. That's it.
Yeah. Right. Don't marry this trade. Just kind of get in, get
exactly.
out. Yeah, exactly. Just date it. We're going to date that trade. And I think it's reasonable, right? And I think and with that call wall, I think you don't have to get too shaken out. I mean, if it gets above 305 towards 310, then maybe you start to have some doubts. But at the moment, it's really, really struggling. So that's the kind of short I like to put on right now. And then I would continue sort of playing some of these interesting plays. I don't know if you kind of like Mara in here at this level, maybe coin. These are high octane though. So
Yeah. So for me, it's all about, we already talked about this mid-October. So Bitcoin was going to rally. It was part of my thesis. Also, semis would follow. So I have this sector rotation thing. And for right now, Bitcoin rallied. Now it's going to take a little pause because we're parabola traders. And by the way, when I said it would come back down to 2150, can I just show my chart real quick on Mara? This is a tricky one, right? And my God, everybody knows that Bitcoin is not my wheelhouse, nor do I find it in any way, shape, or form real. But it is very tradable. And this is what I meant by, we were looking at this before with Bitcoin, with MSTR, with Coin, Hood, and then, of course, Mara, because it's the largest miner. It has the most Bitcoin on the balance sheet. We were already in PayPal. We were already positioning for Square. So these are also plays that have Bitcoin on the balance sheet. This is a theme. This is just a theme. And that's what I chase, is where is the money flowing next for volatility? What does the options market look like for positioning? So this was October 17th, not November 13th. So this is a month ago, kind of hanging out, waiting for something to happen. And then, of course, it popped above, really kind of sat here nicely, moved 25% in a day. So that's the kind of thing that we were ready for. Now, earnings come in, and I've already mentioned this. Coin earnings sucked. Riot earnings sucked. Mara came out, blah. It's coming back down. And this is why I said be careful. It can come all the way back down to that 8-day, which is about 2150. But big picture, you still have Bitcoin in a raging inferno of a parabola, and this can be volatile just like the proxies. So that's why using options is beautiful, because you can define your risk.
And you can really identify where you're, like, so I put out a note today just talking about, I understand what option Greek is really in control, is in the lead. We talked about Nvidia being in the lead in semiconductors. Well, what Greek is in control? So when volatility was high, Vega was in control. That's where you made your money. When volatility is low, theta is going to sort of be your torque. And so you have to understand, where are you focused on? So with options, it doesn't really matter if volatility is high, low, medium. We can find a structure, and that's what we help clients and members with at LaDuc, is really help them to understand, well, what is the best structure for a particular outlook on things? Because there are probably a couple good ones, but there's probably a better one for it. And so that's kind of because options trade in many multiples of dimensions, we have to understand that aspect of it.
And also time frame. So one thing I just wanted to mention, yes, because I know we get into the analysis side of stuff, and that's what I really, really love, right? So big picture pulling out here. I should say this at the very beginning, and I forget sometimes that folks are maybe new here, and because I'm so used to doing a live trading room every day for clients, and then engaging with 10 contributors. So because I run this finance, I consider it honestly a research firm, but we have 10 pro traders and analysts. Hans obviously in teaching options as well. So those are the collaboration skills that we're bringing to support the clients. But for for clients those watching who do not have maybe an option familiarity, Hans has a fabulous course, and it's actually up on our website. So LaDucTrading.com/Hans, you'll see it there. So he provides also kind of structured options education for beginner, intermediate, and advanced, very much like I structure my products, Chase, Club, and Edge, which is very much beginner, intermediate, advanced. And so if you come into the LaDuc Trading ecosystem, you get access not just to Hans and myself, but you have a complete trading desk of 10 subject matter experts. So this is something that we do publicly. It's always fun to kind of collaborate and then test, okay, you see the market this way, and why, and what are you trading? What about this idea? What's your skew view? Because you have your tools of studying realized and implied volatility that might be different from my more kind of focus on the flow and technical analysis. And then I'm basically a little bit more, let's just say, uneducated on the advanced options, and very much focused on buying a directional bet. So I place much more focus on a directional bet where you have the ability to really say, an income strategy, I can do a butterfly and just pin, so you focus on the entire ecosystem of options, hedges on portfolios, not just directional. I'm very much focused on directional, and then using advanced option tactics when necessary, like a bull risk reversal for Tesla or that financed call spread for Nvidia. But I'm very much focused on a directional play. So I just want to kind of, that's where I'm a little bit more focused and limited. You do it all.
But I'll tell you what, you're too kind, Samantha. You can do it all too. But I'll tell you what, it all starts with the stock. And so this is everything. These are derivatives. They derive their price from an underlying price, which derives its value, at least we hope, to the from the underlying business at some point. And so it really, what I tell people, the students, is all roads lead back to the stock. So be careful.
Mhm.
Don't trade options because you see there's a little edge here. There's make sure that you understand that you're still trading the underlying stock. So I love that view that you really start with that foundation of what's the stock going to do, and then you build upon that. If you
Well, I
see a
actually
stock,
I go back. I want to know what the market's going to do. Then I look at the sector rotation and then I look for the
yes,
strongest stock. I don't even like to trade low priced stocks using options. I don't ever do penny stocks. I mean, like I'm always going to look for a very liquid, very, not just a liquid stock, but also an options market that's very liquid. So I'm still going to be really focused on the best of breed plays. Otherwise, it is going to be using stock because it doesn't have a good options market. I don't want to make a market. So, but yeah, I do try to use the backdrop and then come in, find that stock, and then say, Hans, what do you think? What do you, and
and
I
I
think a
like
lot
what
of
you
clients
said
do the
there.
same thing.
I like what you said there about sector rotation. I think that's one step that a lot of people miss, is that you could get excited about something in consumer discretionary, but make sure the stars are aligning for you and that particular sector is doing well. It doesn't mean that your one stock can't be an outlier, but it's always nice when you have more bits of edge and tailwind behind you if your sector happens to be acting well. And so that's what we're talking about here, is really kind of layering that edge. What's the short term? What's the medium term? What's the long-term outlook on the stock? What's going on in the sectors? Is there a rotation going on? How do we express our view in options? Is there skew? Where's the volatility level? So it's really putting all those things together and looking for something that really kind of takes advantage of things. And the coin space was exactly one of those. When I put on the original MSTR trade, everything was screaming to do certain thing. Here's your list here. Here's your McDonald's. So I thought this was kind of cool. I can't remember where I got this from, but same store declines in sales right across the spectrum of fast food, which I thought was really interesting. They have not done that well in the space, except for my little favorite one here, which is Shake Shack, the chart's been going bananas lately. But look at the sales here. So this is Robert Kennedy is going to be happy about this, that there's already
Yes.
some weakness in here. But I agree with you. He could make this chart look even worse. So be careful, unless it's Shake Shack. I don't know what's going on. I think they're in expansion mode. They have room to throw up 500 new stores. We'll see if that continues. But I think that's a very interesting space to watch.
Yeah, I think it's a good space. And I want to just share this real quick and then we'll end. I think, unless there's anything else you want to cover. This is and has been fabulous for safety, defensives, kind of source of funds into XLP, which is consumer staples. We had a really nice advance and then it started to roll over very firmly. And this is, again, I'm on a weekly, but I can tell on a daily too. Same thing. I had an absolute guaranteed we're going to go fill that 79.71, right? So when we started rolling over, I'm like, we are going here. But the point is, I think this will be in more distribution moving forward. And unfortunately, I think we're going to have biopharma, which has been a holdout for a lot of hedge funds, are going to be absolutely hit. This was one that was recommended by Alexander early. And oh my goodness, this is Merck. He did a detailed report on this. And this has been a phenomenal short. And this thing is not done. But I don't like any of the drug manufacturers, period. And this is what I mean by there are shorts here in XLV, XLP. But I think we have some more washing up to do in some of these strong defensive sectors that right now are going to be under attack, for lack of a better word. And I think they'll go find the money will flow elsewhere. Let's just put it that way.
That's where you can really, you can take a view, Samantha, and you can say, well, look, I'm not going to get bearish on Pfizer, for example. It had taken a bit of a hit in that. But what you can do is you can have that inform you as to maybe a little short. So we have maybe Pfizer rallies, or one of these stocks, Merck rallies to a 9-day or an 8-day, whatever level you like. And that's your chance to maybe sell out a little bit of volatility, sell out some calls, maybe an iron condor or something like that. So you can definitely play these these weak themes. That's the great thing about options, is you can play whatever the prevailing wind happens to be. And that might be a place where you can offset some of your long exposure with a little bit of negativity towards those areas. And that's a nice offset.
Well, I appreciate very much everyone coming out for Options Out Power Hour with Hans and myself right before, well, we get into Thanksgiving week very soon, but we got one more. We got one more Wednesday before Thanksgiving, then we'll skip a week. And then we'll come back after, and you will get the recording of this. But great, I think we're just going to work through options expiration on Friday, and then of course Nvidia. I'm still bullish big picture. I think you're still bullish big picture. We'll have a little chop for sure. And I've got 1240, by the way, on a VIX level that I'm personally looking for a bounce there. I think we kind of fall, fail, whatever you want to call it, fade into that 1240, and then let's see. But for now, definitely find us at LaDucTrading.com. We have our respective Twitter handles. And of course, Hans has his excellent options trading course, LaDucTrading.com/Hans. All right. Greetings, everyone. Bye.
Subscribe to LaDuc Trading YouTube channel for more macro to micro options power hour and other content.